This is Oracle's trading, your access to secret forex knowledge. We are going to lesson 11, and today we'll be talking about introduction to moving averages. Moving averages are important part of trading. Every trader, or let me say most traders, professional traders, have at least one moving average on their charts. This is because of the role that moving averages play in trading. Moving averages are dynamic lines that are plotted or obtained by calculating certain parameters in the market. There are different types of moving averages: simple moving averages, exponential moving averages, and what have you. But whatever moving average a trader chooses does not really matter. It depends on what you want. The most important thing is how you use them. Some people have said that moving averages are lagging indicators. Whether they are lagging indicators or not, from my experience in trading, they are a good part of a good trading system. Moving averages can be used to determine the prevailing trend direction. If you know how to use them, you profit from them. If you don't know how to use them, just like every other technique, you may begin to suffer losses. In our trading methodology, we are going to be introducing you to some moving averages, a kind of moving averages that can help to maximize or optimize your profit. Moving averages can be used as an indicator to inform you about a probable change in trend direction. So we are going to be looking at some moving averages, how to insert them on your chart. But we're not going to be going deep. This is just an introduction. By the time we enter the strategy section of our training, we are going to see how we apply our moving averages. We have said that there are different types of moving averages. It doesn't matter the type of moving average you want to engage. We say whether it is lagging or not, it doesn't matter. It is the technique that you have that determines your profitability in the market. Moving averages also serve as support and resistance levels. So let us just take a look at example here. If you want to, this is MetaTrader 5. If you want to insert a moving average, you can just come here, insert indicators. You come here, trend, and then moving average. So under the moving average dialog box, you can choose moving average of a particular period. Like when we say moving average of a particular period, by default here, also the period is period 10 here. I can change it to period 14, and that means that the candlesticks, the number of candlesticks considered in computing the moving average I'm going to see on the chart are 14 candlesticks. That is 14 period. If I put 20 in the period, that means 20 candlesticks are considered. The previous candle, the most recent 20 candlesticks are computed to have the latest position of the moving average. Now the method here has to do with the type of moving average you want to use. We have here available on this platform, we have simple moving average, exponential moving average, smoothed moving average, linear weighted moving average. I particularly prefer exponential, but you can use whichever one you like. Some traders prefer simple, some prefer smoothed weighted moving average. I have techniques that use exponential. I have techniques that use smoothed. So whichever one you prefer, let me put it exponential here, and let's say we are considering period 20. As a matter of fact, period 20 moving average is a core part of our trading methodology. So we are going to be making use of it. And then here we have that applied in, where is it applied? Which characteristic of candlestick are you going to use to compute your moving average? Remember, we talked about 4 crucial characteristics of candlestick, a typical candlestick. We have the open, high, low, close. So here, look at it. We have close, open, high, low, median price, typical price, weighted, close. So you can choose whichever you like, but I prefer to work with the close, because the close seems to summarize the particular price, the optimum price for a particular trading or a particular instrument in a particular time frame. So I prefer to use close. Then the style, what color do you want? Do you want it to be red? You choose your color. You can decide to choose any color. Let me choose this color, aqua, and then you choose the weight, how thick you want it to be. Okay, first of all, okay, let me say okay. So now this is the moving average on the screen here. So I've computed my moving average, that is period 20, and you can see how the market obeys this moving average. For some, when the price is above 20 moving average, it is uptrend, so they begin to look to buy. I am not saying that you should do that. We have better techniques on how to apply this. Some professionals, serious professionals, this is the only moving average they have on their system, and they trade with it and trade wonderfully with it. So it all depends on the strategy you have been able to develop, or the strategy you have around a particular moving average. So any moving average you choose can work, but some work better than others. In our trading methodology, we are going to be introducing you to moving averages and explaining to you why we have chosen to use those moving averages. It's going to amaze you. So just keep watching, subscribe to our channel if you have not done so. Comment on the videos. Questions are welcome. So this is it, and this is how it works. So this line may not be that thick for some people. What you just do, if you are using MetaTrader 5, is that you double click on the line, on the moving average, and then you come to this line and you choose the weight of the moving average. So let us put it something like this, and then this is more visible. This may be too thick for some people, so let me reduce the weight, and then something like this. I think this is cool. This is okay. So this is how you insert your moving average on your trading platform. So you can decide to add another moving average. Let's say we add another one. Let's say this time around we want period 50. Everything remaining the same, exponential moving average, apply to close. Then let's change the color. We have to change the color, or we need to change the color. Let's say 50, and then we say okay. Now 50 and 20 are on the chart now. One is faster than the other. The moving average 20 is faster than 50. So it is going to respond to price change before EMA 50. We call it EMA, exponential moving average, EMA. So EMA 20 is going to respond to price change before EMA 50 does so. For some people, this is a trading technique. And what they do, how they trade this, is that whenever there is a crossover here, like at this point there is a crossover, EMA 20 is crossing EMA 50 to the upside. And then some people place their trade directly here like that. No, we are not going to be trading like that. Because this crossover does not mean that the trend has changed. But what it does mean is that the trend may change. So you have to confirm trend change before you begin to trade in the direction of that trend. So entering the market every time there is a crossover of your choosing moving averages is not the best way to trade. You can refine the system better, but there are moving averages that you can apply. That is where the secret knowledge comes. There are simple, or rather, let me put it this way: there are moving averages you can apply such that once they cross over, immediately you place your trade. But those are moving averages of higher dimension. So as time permits us, or as we are permitted, we will be coming to such moving averages. So you need to keep pace with us and follow strictly, because as we proceed, we will be taking you deeper and deeper into trading. But mind you, the list of our techniques is enough to ensure your dream in the financial market. So stick to the training strictly. What we tell you to do, do. Do not think about it. Don't guess. Don't be afraid. When we say strike, you strike. Press the trigger, you press it. When our methodology tells you to come out of the market, do not hesitate. Just come out of the market. So this is a moving average, an example of moving average crossover. So it's a good technique when you know how to apply it. So moving average also acts as support and resistance. This is what this is saying. For instance, here after the crossover, the market retraces. Retraces means coming back to the direction where it was coming from initially. So when the market ascended uptrend in this way to get to this level, the market retraced, and you see at this level the market was stopped. That is, it means that the moving average here, of averages here, are serving as support to the price, to the market. So this is the red is EMA 50. It stopped the market there. So usually you don't just use one moving average as your support. We use a zone. So, and the zone here is EMA 20 and EMA 50. I'm not saying that you should go and apply this technique in your trading, but some do use this technique like that. It's a good one if you choose to, but I'm just using this as an example now, not that you should go and be using it. We are going to very soon, we are going to enter our techniques proper. We'll begin to teach you how you can make money from the market, and you are going to begin to enjoy your trading. Forex trading should be enjoyed and not endured. A lot of traders are enduring it. They are losing. Some are at the point of quitting. But if you have come across this channel, I congratulate you once again. So be patient. All you need is discipline. Keep doing what we say you should do, and then you will smile. You're going to smile. So that is introduction to moving average. Let me recap quickly again. Moving averages are very powerful indicators that when you engage properly, you make profit from them. Moving averages can help you to determine the direction of the prevailing trend. It can help you to determine the direction of the prevailing trend. Moving averages can also help you to determine trend change or trend reversal. They are a very, very powerful tool that you can develop strategies around and you stick to them. There are different types of moving averages. As we said, we have simple moving averages, exponential moving averages, weighted moving averages, and all of that. There are many, but whichever one you choose to use, master it, and then have your strategy well built around them. So they can help to keep you in the direction of the market. Apart from helping you to determine the direction of the trend, they can keep you in the direction of the trend, like this. Once MA20 crosses MA50, so we assume that is for traders that are using this technique. For instance, you just assume the market is in that direction and you keep looking to buy in that direction. So it keeps going, and keeps going. And then there was a change here, there was a crossover down here. Does it mean you should begin to sell and all of that? I have not said so. So when we enter our own methodology, when the oracle speak, you are going to enjoy your trading. But in general, this is how some traders use it. And then you see, as simple as this technique is worth thousands of dollars. As simple as it is, you still see a lot of traders blasting their accounts, and then you begin to wonder what is happening. So you need discipline for proper execution, adequate, brutal execution. So if you don't have that discipline, you're going to suffer serious setback. No matter how good your techniques are, you need to know some things that work together to make a trader a complete trader. Most likely, we are going to be doing videos on that later, putting together all that we have been talking about. So as long as MA20 is above MA50, it is assumed that the market is trending up, it's going up. And then once it crosses again, you want to think of selling. And then like that, see that this has moved very wonderfully and all of that. So, and then we said that some people consider moving averages moving averages as lagging indicators. I would say it doesn't matter whether an indicator is a lagging indicator or whatever name it is given. All you need is to have a solid technique, a technique that can stand the rough times and give you profit in the good times. So some people, let me mention this quickly before I round up this lesson. For robust technique, to make this, for instance, to make the moving average more robust and all of that, some people add a third moving average. And let's say this one is 80 or 100. So they just add a third moving average and build their technique around it. So when you see stuff like this, you say, wow, what is happening? But what is the rationale behind it? How do they work? How can you get the best from them? So moving averages will be part of our technology, but as I told you before, we make use of moving averages we call mystery moving averages. What? Because of when we get there, we're going to tell you why we use them. So get prepared, get focused, and prepare yourself for discipline, and prepare yourself to begin to make profit from the market. In few lessons, we are going to be done with the theoretical part of our training, and then we are going to delve into the practicals where we begin to dish out techniques to you, and it will now be left to you to apply them faithfully and committedly so that your trading experience can be transformed for better and you begin to enjoy making money. Don't miss it out. Don't miss it. That we are bringing trading to you in a way so simple doesn't mean that trading is that simple. But we are going to make trading as simple as possible for you. You are going to, let me not say so much here. Prepare for the next class. If you know you have not watched our previous videos, maybe this is the first video you are coming across with, we will encourage you to go and start from lesson 1 and then follow till you catch up with us, so that when we enter into the practical aspect, you are not going to lose out on anything. Once again, this is Oracle's Trading, your access to secret trading education. Subscribe to our channel if you have not done so, and make sure that you watch all our videos to transform your trading experience. See you in the next video.